Tesla has lost billions in market value in just days, and what makes this crash so shocking is that it's not coming from one single reason, but a full chain reaction shaking Wall Street confidence. Just a few months ago, Tesla was seen as the future of AI, robotics, and autonomous driving, a company that could dominate the next era of technology. The real problem began when Tesla's explosive demand started slowing down, while production kept increasing, forcing repeated price cuts that are destroying profit margins at an alarming speed. Now, Tesla is facing brutal competition from China, especially BYD, which is rapidly capturing market share with cheaper, faster, and more aggressive electric vehicles. Another major concern for investors is Elon Musk himself, because Tesla's future depends heavily on belief, and now many are questioning whether Tesla is still his main priority. Then comes the biggest question mark. Tesla's robotaxi dream, a vision Wall Street has been pricing in for years, but still hasn't fully materialized. On top of that, the entire tech sector is under pressure, as high interest rates and tighter liquidity are forcing investors to rethink expensive growth stocks like Tesla. The real concern for investors is simple. Tesla's profit margins are shrinking fast, and every price cut is making the situation worse instead of better. And that's why Tesla has become one of the most divided stocks on Wall Street, with investors split between believing in a future revolution or fearing a long-term slowdown. So the real question is not whether Tesla is falling, but whether this is just a correction, or the beginning of a deeper reset in expectations. One of the clearest warning signs came from Tesla's delivery numbers, showing a noticeable slowdown in growth across key global markets. To fight slowing demand, Tesla began aggressively cutting prices, but instead of solving the problem, it started destroying profitability at scale. Meanwhile, competition from China intensified rapidly, with BYD expanding aggressively and Tesla losing ground in several international markets. And investors started questioning something uncomfortable: whether Elon Musk's attention is too divided across multiple massive companies. Because in Tesla's case, perception moves the stock almost as much as fundamentals, and any shift in confidence can trigger massive volatility. Wall Street has been pricing Tesla like a future AI and robotaxi giant, not just an automaker, and that expectation gap is now under pressure. And after years of full self-driving promises, investors are starting to run out of patience as timelines keep shifting. Macro conditions are making things worse as capital rotates away from high-growth stocks into safer, cash-generating companies. Despite the fear, some investors are aggressively buying the dip, believing Tesla is still one of the most important long-term AI and robotics companies on Earth. So now the market is stuck between two futures: a Tesla that redefines technology forever, or a Tesla that slowly reverts back to a traditional automaker. What makes this situation even crazier is that Tesla used to recover from every major crash before. But this time, investors are starting to wonder if something fundamentally different is happening underneath the surface. Because even after the recent sell-off, Tesla is still valued far above traditional automakers, and Wall Street is beginning to question whether those massive expectations are still realistic. Tesla expanded aggressively for a future of explosive demand, building giant factories and increasing production capacity worldwide, but now the market is questioning whether demand can actually keep up. And while Tesla is slowing down, Chinese EV companies are accelerating fast, flooding the market with cheaper electric vehicles and putting enormous pressure on Tesla's dominance. For years, investors accepted Tesla's massive valuation because they believed autonomous driving would eventually change everything. But now Wall Street wants proof instead of promises. Tesla expanded aggressively for non-stop growth, more factories, more supply, more production. But when demand slows down while production keeps climbing, the entire equation starts breaking apart fast. Tesla kept cutting prices again and again and again. Customers love cheaper cars, but investors watch Tesla's legendary profit margins start collapsing in real time. One of Tesla's biggest advantages used to be its incredible margins, but now those margins are shrinking fast, and Wall Street absolutely hates what it's seeing. And then came China. Tesla suddenly wasn't just fighting American automakers anymore, it was fighting an entire wave of aggressive Chinese EV companies growing at terrifying speed. Companies like BYD started producing cheaper EVs, faster EVs, and sometimes even better value EVs. And for the first time, Tesla no longer looked untouchable because once investors stopped believing Tesla can dominate the world with monopoly-level power, those massive stock valuations suddenly become very difficult to justify. Whether people admit it or not, Tesla stock has always been deeply connected to Elon Musk himself. And when investor confidence in Elon weakens, Tesla usually suffers immediately. Tesla, X, SpaceX, XAI, politics, robotics, social media wars. Elon Musk suddenly looked like a man fighting 20 battles at the exact same time. And that created a terrifying question for Wall Street. Is Tesla still Elon Musk's main priority anymore? Or has the company started losing his full attention? A huge portion of Tesla's valuation depends on something that still doesn't fully exist yet. The robot taxi dream, and Wall Street is starting to demand real proof. Wall Street hasn't been valuing Tesla like a normal automaker for years. It's been pricing the company like a future autonomous driving empire. Because if Tesla successfully builds a global robot taxi network, the company could become enormous. But if that vision fails, the stock suddenly looks massively overvalued. For years, investors kept hearing the same full self-driving promises again and again. New timelines, new predictions, but still no fully autonomous future. And now Wall Street is becoming impatient. Investors don't want more promises anymore. They want real autonomous driving results delivered in the real world. And Tesla's problems got even worse because the entire tech market started turning against high-growth companies as interest rates remained painfully high. When money becomes expensive, investors stop caring about distant future dreams and start demanding profits today. And that hits companies like Tesla the hardest. Tesla has always been one of the most emotional stocks in the entire market, and when fear enters the system, the volatility becomes absolutely explosive. But despite all the fear, some investors are still buying Tesla aggressively because they believe this drop is only temporary. Those investors believe Tesla is evolving far beyond cars, into artificial intelligence, robotics, energy storage, and autonomous transportation. That's why Tesla remains one of the most controversial stocks on Earth. Some believe it's massively overvalued, while others think it's the future of civilization itself. So now the real question becomes, is Tesla actually crashing, or is the stock simply resetting after expectations got way too high? Because right now, even the market itself doesn't fully know the answer. That uncertainty is exactly why Tesla stock has become so dangerously volatile. Every Tesla earnings report matters now. Every delivery number matters. Every Elon Musk interview and every AI announcement can move billions overnight. Investors are all trying to figure out the exact same thing. Can Tesla still dominate the future, or has the world finally caught up? And maybe that's the most fascinating part about Tesla. It's no longer just a stock. It's become a giant bet on the future itself. The bet on artificial intelligence, a bet on robotics, a bet on autonomous transportation, and whether Tesla can truly build the future Elon Musk keeps promising. Because if Elon Musk actually succeeds, Tesla could still become one of the biggest and most important companies in human history. But if growth keeps slowing, competition keeps rising, and investors stop believing in the story, this drop may only be the beginning. And that's exactly why the entire market is watching Tesla right now. Because what happens next could change everything. Right now, Tesla sits at the center of one of the biggest financial debates in the world, and nobody truly knows how this story ends. Tesla's story has never been simple. It's been a constant battle between unbelievable innovation, massive expectations, and brutal market reality. Some investors believe this fear is creating the buying opportunity of a generation, while others think the risks are only getting started. If Tesla finally delivers true autonomous driving, the company could completely reshape transportation, robotics, and even the global economy itself. But until Tesla proves it can overcome slowing growth, brutal competition, and rising pressure, the uncertainty isn't going anywhere. And maybe that's why Tesla remains one of the most important companies in the entire market, because its future could either change the world or disappoint millions watching it.